Hi everybody, thanks again for tuning in to 5 Minute Finance. My name is Colin and I'm a financial advisor here at IHT Wealth Management in Chicago. So for this week's video, I kind of want to do a similar thing to last one. I want to talk about the coronavirus and just revisit some of the information I talked about in my last video. I had a couple people reach out, leave a couple comments, and just ask some questions. So I wanted to revisit that situation, dive a little bit deeper into what to expect. So to take a step back, that last video, I would say my overwhelming message was markets tend to overreact, right? And when that happens, as investors, you need to keep a level head and you need to use that as a buying opportunity. And it doesn't always have to be buying, but in this situation, it is. So, last week we saw the S&P drop almost 15 percentage points, right? Which it is what it is. It happened. It's obviously due to this virus and this outbreak that's going on. So overwhelmingly, I would say that's a great example of emotional investing, right? People watch the news, you read articles online, you hear about how bad this virus is, and it is. I'm not disputing that in any matter, right? Plenty of people have unfortunately passed away, and even more have been affected by the virus, right? And daily lives have been disruptive, supply chain, everything from business to your personal life has been affected in some way or another. That being said, my question to you would be, pick one of your favorite stocks or a popular stock, right? And so I just want to use Amazon for an example, right? So since mid-February to the end of the month, Amazon dropped around 15%, right? Which again is fine and good. The market dropped 15% last week kind of as a whole. But my question to you would be, what has happened since then that has made Amazon 15% less valuable? And will this outbreak and epidemic, will it affect their earnings? Will it affect their revenue? Absolutely, right? They might sell a little bit less. They might just do a little bit less business this year. But by 15%, I don't think so. Personally, I don't see that happening. I don't see all of these companies missing their earnings targets, their revenue, all of this. I don't see business contracting by 15% this year. It doesn't make sense. It doesn't add up with the numbers. So, and again, here, Amazon is an arbitrary example here, right? You can insert plenty of other stocks, successful companies into that argument, and the idea still holds true, right? This just seems to be kind of an overselling example. And then, to my point, this past Monday, right? We saw one of the single best days in stock trading history, right? The Dow had the largest point gain ever. And then, the next day we saw Fed cut rates, which they were probably going to do that anyway, or at least that's what all signs pointed to. And they just did it a little bit early in response to this epidemic that's going around right now, right? So everything we see points to positive outlook, maybe not exactly what we would have said 3 months ago, but things are looking up, right? And that's the main point. And overall, again, to just take another step back, these types of events, just to reiterate, you need to keep a level head. Don't let your emotions get the best of you, and use it as an opportunity to take advantage of the people that do, let their emotions get the best of them, whether it's overselling, whether it's buying too much, whatever it may be in that given situation. You need to keep a level head, stick to the numbers, know what history tells us, and go with that. So with that in mind, that's it for this week. If you have any questions, comments, ideas to talk about in the future, like I said, leave them in the comments below or shoot me a message. And thanks for tuning in.